What a spectacular day in the stock market. The S&P 500 was basically up 2% today. The superstar was Meta slash Facebook. They were up double-digit percentages off of their earnings announcement, and it really just pulled the entire market up with them. Communications had a spectacular day. It was up from a sector perspective nearly 6%, an entire sector. They by far and away were the best performing sector, but technology and discretionary and even real estate had very strong days today as well. So we'll go through all of that analysis in tonight's video. We'll also take a look at what's happening from more of a bond and interest rate perspective. We'll also have a little conversation about what's been going on with foreign stocks, and then we're going to get into our trade application example where we wanted to focus on a chart that really didn't have much in the way of a big move today alongside the stock market because it's not really correlated with the stock market, and we're going to concentrate on that for an iron condor candidate. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's April 27th, 2023. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below into our description area. Make sure you're signed up for our email distribution list so that way you can be notified whenever we post these videos. You'll also find at the bottom of the emails which stocks are giving you overbought and oversold cluster signals in the S&P 500. In addition to that, we're heavy users of Twitter. If you're not doing so already, I would encourage you to follow me at Brandon Van Zee, and we really appreciate those of you that click like and retweet on these Market Outlook related posts. And then last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trade activity, and it was a glorious day for the bulls, especially considering the last time I was with you on Tuesday, it was the opposite. Remember, that was the big down day where we were down 1.6%. So we got all of that back and then some here today as the market was up almost 2% here today. And you can see it was a definitely bullish day according to the colors we see in front of us. The vast majority of squares and rectangles in the green there. A number of them standing out for a well above average performance as well. Meta was probably the story of the day, up about 14%. Remember, this is a huge company, $611 billion these days. So that went a long ways to kind of kicking us off on the right foot there as they announced their earnings. Not to be outdone, Comcast also had a very good day. It was up about 10% here today. It's a stock that we've owned a few times in our dividend classes here over the years, and nice to see a nice 10% snapback here today. Remember, that's the company that owns NBC, in addition to, of course, all of its cable assets and theme parks and different things like that. Anyway, very nice day there for Comcast. Sticking in the communications sector, Verizon also had a very nice day, up over 5%, which for a sleepy old telecom, that's a pretty good move there. Verizon was kind of interesting. Some of you saw my post on Twitter. Yesterday, I taught my factor-based swing trading class, and we look at three trade setups in each of those classes. And anytime we get into a trade and close it down the next day at max gain, we call that hitting the easy button. It doesn't happen all that often because we plan on being in trades for about 3 weeks when we're swing traders. So to get it done in one day is a very enthusiastic result for us. What was really interesting about yesterday's class is all three of our trade setups went to max gain here today, just one day later. And that included 2 bullish trades and 1 bearish trade. So it wasn't just because we had nothing but bullishness today. We actually won on our bearish trade, which was in the oil patch, which suffered a little bit here today. So fun time to see that. I don't remember that ever happening before where all 3 of our trade ideas went to max gain in one single day. So special day here, not just broadly speaking, but internally at Market Scholars as well. So Verizon was one of those that went straight to our max gain price target. Anyway, Disney also had a very good day there in the communications sector, up about 3.5%. Alphabet had a nice little snapback. Remember, they initially had a pretty good reaction to their earnings and then kind of gave up the ghost. Well, today they're kind of surging back in the bullish direction once again. They were up 3.75%. So a really nice day out of some very important communication services companies. In terms of the big kahuna in the tech world, Apple was up 2.84%. Keep in mind, we have yet to hear from Apple in terms of their earnings report. They're basically the last big tech-oriented company to do that. This afternoon, Amazon reported their earnings, and some of you might have seen my tweet where I showed that high-speed car chase where the car flips over to the other side of the barrier and keeps going the exact opposite direction. And that's how it kind of felt looking at Amazon's price activity after hours here tonight, because Amazon initially went up 11%, nearly 12% in the after hours session after releasing their earnings. And then by the time the hour was up and they got into their conference call, all of those gains were unwound, and it actually closed a little bit below where its closing price was in the after hours session. So it reversed all 11% of those positive gains. So we'll see what that means for the market going into tomorrow. Last I checked, the futures are down just a little bit. I'm doing this video, by the way, a little bit later than I'd prefer tonight. So I do apologize in advance if I'm not getting this out as quickly as I typically try to do. I had a service person helping me out with my sprinkler system, and of course they never give you an exact time when they'll show up. And wouldn't you know, they show up exactly in the late afternoon when I was planning on doing this video. So pushing my night out a lot longer as well. Not particularly fun, but we'll get through it. At least we've got some nice gains to talk about in that regard. So we can't really, it's not worth getting frustrated over on a day like today, right? So anyway, Apple will be the final big kahuna to report their earnings, and that will be next week. Remember, Microsoft already reported, and they are up 3.2% here today after a spectacular day yesterday. So Microsoft having an amazing run of things, as is Meta. Both of those companies hitting 52-week highs. Remember, those are not all-time highs because they were up a lot more at the beginning of 2021. But 52-week highs is nothing to stick your nose up at. That's a pretty good result if you think about what we've been through in the last year. Yet two of the most important companies out there are hitting new yearly highs at this moment. We also saw that Eli Lilly had a pretty nice day in the healthcare space, up about 3.7%. S&P Global was up about 4.5% here today. That's the company behind S&P 500. I think I might have misspoke the other night, by the way, when we were talking about it. It might have been MSCI. Sometimes I get those two confused. But anyway, this is the one that trademarks that S&P name and gets that licensed out for ETF usage and different things like that. They're also the company that has a credit rating, and that is a very Modi business. In other words, a strong competitive advantage in there with Moody's and Fitch. So anyway, they had a pretty good day there as an aristocrat, up 4.5%. Speaking of aristocrats that did well today, Aflac, the health insurance company or life insurance company, was up 6.25% today, so another solid performance there. Tesla bounced back. It was up 4%. Some of you might be wondering, well, what does that mean for the bearish Tesla trade that you had going? Because I did do a bear call spread on it here fairly recently in this presentation. And strangely enough, it was actually up today. The bearish trade that I did was up despite this company itself being bullish by 4% today. I was not expecting that, but nonetheless, sometimes it shakes out that way because of volatility and other factors that kind of affect the pricing model. So we're doing pretty well on that bearish trade out of the gate. We're also doing well on the bullish trade that I put on just 2 days ago with you guys with UPS. It snapped back. I don't know if I see it on here. Yeah, there it is. UPS was up 3% today. Remember, that was the one that we sold puts on Tuesday after that long-awaited 1% drop that we were waiting for. And that's a good reminder of why we try to take advantage of those big down days by selling volatility when it's somewhat high, getting those juicier credits. Today is a good example of why it's worth taking that risk. We're now up pretty nicely on that trade, even though UPS fell pretty decently yesterday. So it initially looked like it was going to be a trade that started off on the wrong foot, but here we are just 2 days later, and it's doing exactly what we want it to do. So anyway, we'll see if that keeps up or not. There has been a little bit more wear and tear in the transport, so I don't think we're necessarily out of the woods yet, but remember, the nice thing about selling a put is you're giving yourself a lot of extra breathing room by selling an out-of-the-money contract. So I think that's going to help our cause there a little bit as well. So those are some of your bigger winners. Vertex Pharmaceutical also had a nice 5% up day there. So, it's really almost too many to go through. Stanley Black& Decker, another aristocrat, was up 6.6%. We looked at that one recently in a DGI class as well. Ingersoll Rand was up 6.7%. Pentair, this is the one that we talked about here in the presentation earlier in the week when it was accidentally placed in the oil field services area, which is not where it belongs. Nonetheless, that industrial company was up almost 10% today. By the way, speaking of which, we've been talking about how Thinkorswim is horsed up right now with their sector and industry allocations because of the big switcheroo that took place from a global industry classification standard perspective here about a month ago. Thinkorswim still does not have their platform updated for that. Last time around, I was saying I can't see real estate on here at all. It's almost like they have eliminated the entire sector. But I had made that comment offhand that at least I see it over here on the left-hand side where it kind of breaks it down by sector. But here earlier today, I happened to click on it, and wouldn't you know, there's just one single stock that shows up in that real estate management and development space, CBRE. All of the other dozens of real estate companies that are the traditional REITs are not showing up here right now. So we got to be careful relying too much on the Thinkorswim sector and industry data at the moment because they are still, in the process. Apparently, I haven't heard from them, but hopefully somebody has let them know that they need to get working on that because otherwise we're getting a little bit of faulty data out there. Nonetheless, strong day across the board, I think, is the takeaway. You did notice that AbbVie had a pretty bad day. They were down about 8%. That's another dividend aristocrat there. This was somewhat expected that they would run into a little bit of a buzzsaw because their top-selling drug, Humira, is coming off a patent, and there was some expectation that generic competition would steal away some of those sales, and so I think that came to fruition today once they reported their earnings. So that stock has done really well over the years, so giving back 8% is not the end of the world. Nonetheless, a pretty big move because it is a large $262 billion company these days. Align, which is a dental company, also was down about 10% today, so that was a pretty big move there. I mentioned before some of the oil companies were down today, so in particular you're noticing some of those oil refining companies in the red there. I noticed that John Deere was down just a touch today. Waste Management was down. It's pretty random in terms of where the red squares showed up. It didn't seem to really have much of a theme and mostly related probably to earnings. So for the most part, a really spectacular day there for the bulls. Let's go ahead and pop on over here to the main part of the platform now and take a look at the specific breadth numbers. And you can see here 439 stocks in the S&P 500 managed to close in the green today. So that was good for about, 88% or thereabouts in terms of the hit rate. And so that's a pretty solid one-sided day. It was not just the result of a handful of mega cap techs doing really, really well. Instead, it was a broad-based advance. So we like to see that. Let's take a look at our charts now. And here is the S&P 500 on chart 6D for those of you that are premium members following along at home. I like to start our conversation from the charting perspective with this chart whenever we have a move of at least 1% up or down. And on Tuesday when I was with you, we were talking about finally after 23 days, we had a 1% down move. It was actually about 1.6% on that candle right there that I'm pointing at, or that bar. Here's what today's looks like. So here's the green bar stretching all the way up to nearly touching that orange line. And remember, you can always read these labels if you forget what those different levels represent. So the orange line is a 2% price move, and since it's above the black line as opposed to this orange line below it, that's a positive 2% move as opposed to the negative 2% that would be down here. And so it allows us to very quickly and easily see how big of a day this was in comparison to other days more recently. And if we kind of just backtrack with our eyes, we can see that the last time we had a day this big was January 6th of 2023. So we're talking about many, many months here since we had a day as aggressive to the upside as this. It was a very noteworthy day. Strong breadth, really good participation, not just measly moves here and there, but many 5 to 10% types of moves in a variety of sectors. So it wasn't just kind of consolidated in one little corner of the market. So broad-based advance there, I think that's a positive sign for the bulls, all else being equal. You'll also notice here that we saw the VIX down below fall from, we were, I think, around 19 or somewhere thereabouts the other day when we looked at it. Now it has fallen back to 17. So volatility continues to meander down and to the right. It is what it feels like. So it's been interesting to watch that story play out as well. All right, let's go ahead and take a look at our foregrid as we pull this up here. A reminder that the background colors of these charts will tell us what the current posture is for these various securities. And you can see that when we're looking at today's candle on all four of these charts, we close near the highs of the day. So that's a good bullish sign there. It kind of gives you the impression that had the markets been open for another hour or two, we probably would have continued to climb if that were the case. So usually you look at that bullishly. You'll notice that we have just one chart at the moment, and that's the Russell 2000 in the lower right-hand corner that has a red background or a pink background, telling us that that is a bearish posture using that green line or the intermediate line on the market forecast technical indicator. The other three charts have the darker shade of green, telling us that we have strongly bullish postures on those three. So, for the most part, that's a good bullish sign as well. If you have 3 out of the 4 charts with bullish postures, there's a slight bullish tilt right now, regardless of whether you think we deserve these gains or not, right? There's always going to be people complaining because they're not positioned properly, and they'll be upset that the markets were up, or in other cases, sometimes they'll be upset that the markets were down if they're fully positioned on the opposite side. So in the end, we always got to do our best to read the charts and to recognize that there is some truth in price. And right now, there is a little bit more bullishness embedded in the system if you believe that price is truth. And right now, we're getting some really nice bounces up and off of those moving averages. Those are the types of setups that we're traditionally looking for in my swing trading class. We like that situation where a stock or an ETF or what have you comes down to the rising moving average, kisses it, and then bounces up and off of it, forming what we'd refer to as a Cahold pattern, which is an acronym, stands for close above the high of the low day. With yesterday being the low day on the S&P 500, we clearly have a Cahold. In fact, this is a very emphatic Cahold because not only did we close above yesterday's high, but we closed above the prior day's high. So it was a very violent bounce to the upside. Usually it's not quite that emphatic, but today was a special day. You'll notice that we have a green moving average on the S&P 500, on the Dow Jones Industrial Average, and on the NASDAQ Composite. And what that means is that price is currently above a rising 30-day moving average. Again, those are bullish features to the market. The only one that does not have a green moving average is the same one that has the red background, and that is another way to confirm that the Russell 2000 remains our laggard in this current market. And so today you can see that they also lagged, which is a little bit rare, right? A lot of times when you have a very big exaggerated day like we had today, the Russell 2000 is going to participate along with the market at an even more heightened degree. In other words, if we have a big up day, usually the Russell 2000 is going to be able to boost up higher than the S&P 500. And if we have a big down day, usually they will sink faster as well. They're just a more exaggerated mover because we're dealing with small cap companies, usually more speculative types of companies. Well, that's not the case today, and that's kind of sharing in that theme that we've identified for the last several months, especially here more recently since the banking crisis ensued, because of course we have a lot of those regional banks here in the Russell 2000. So today, despite a massive rally across the board, the Russell 2000 was only up 1.2%. They were the laggard here today. The best performer here today, no surprise, was the NASDAQ. Remember who the superstar was today. It was Meta/Facebook. Meta, of course, is a huge component within the NASDAQ composite, but has zero impact on the small cap Russell 2000. So Meta's big move today really helped boost the NASDAQ composite, similar to how Microsoft boosted it the day before. That was a really interesting day yesterday, where Microsoft was up so much that it was single-handedly responsible for causing the NASDAQ to go up. I think it was like 0.7%. But without Microsoft's impact yesterday, the NASDAQ actually would have been down. So one single stock was the reason that the index itself was up. It's kind of interesting. You don't see that too often. Today, obviously, that was not the case. We had broad-based help and exposure to bulls, all sectors. And so that really helped on the technology side of the coin, and that boosted the NASDAQ composite up 2.43%. Second best performer today was the S&P 500. And remember, it's kind of the same conversation there. Meta is still a very important company in the S&P 500, which is a market cap weighted index of 500 important companies. But Meta is not in the Dow Jones Industrial Average, right? Dow is certainly catering to large mega cap companies like Meta, but oftentimes kind of older line companies more so than the newer companies. Obviously, there's some exceptions to the rule there, but in general, think of like old school companies like Coca-Cola and Procter & Gamble, that sort of thing, are in the Dow, not necessarily the new companies like Tesla or, in this case, Meta. So the Dow did not get any positive benefit from Meta's massive move here today, but still had a reasonable result of 1.57%. So, all in all, a pretty solid reaction here today, especially considering the market was tested pretty strongly just 2 days ago, and it could have used that as an excuse to start, spiraling lower, right? Sometimes you just need a crack in the dam, and then all of a sudden, it's starting to spurt water all over, and then the whole thing goes down, right? Sometimes the markets will act that way. So it was really good that we were able to kind of plug the holes in the dam and actually see some progress for the bulls here today after what could have been a difficult time earlier this week. Of course, tomorrow always brings a new story, and who knows, like I mentioned before with Amazon, let me show you here. If we pull up AMZN, what I was referencing before, this actually is not doing a very good job of it for some reason, but it'll at least go to show you. Hang on. Something really weird going on here in the data. It did not trade up to 150, so I don't know why Thinkorswim is showing that. It did trade up to 122, and that happened really early on, I think right in this first 5 to 10 minutes. You can kind of see after the market closed, the shaded part of the 1 minute chart, Amazon stock price went up and topped out about here at around 122 bucks. So this was all within the first 7 minutes after the market closed, because they are one of those that as soon as the closing bell hits, they issue the press release that shows what the earnings results were, and then market participants instantly react to that. Some other companies like Apple next week, they traditionally do not release their earnings until a half an hour after the market close. So every company kind of handles that a little differently, but Amazon usually right out of the gate, you're going to know what the reaction is. And Amazon already had a pretty good day, right? They were up 4.6% today, rallying right alongside the rest of the market. So it was already a good day where they were up $5 per share in the normal session, and they closed at around 110. So to go from 110 up to 122, adding another $12 per share on top of the $5 they got in the normal session, this was, setting up for making it a very spectacular day. But as soon as the conference call hit, I'm going to kind of advance the candles here. You're going to see a big sell-off here coming up right there. Boom is one of them. That one might have been a glitch, so hang on. We'll see it here, though. It'll be very obvious from what I noticed before. So there's maybe a start of it where it goes from like 120 down to 118, but even that's not what I'm referencing. I think right when the conference call got started, there was pretty much a straight down move from like 120 down to 110. Problem is, I don't know exactly when that got started. Here it comes. So right here is what I'm referencing. Notice that this would have been about a half an hour after the market closed, about 36 or 37 minutes afterwards, And once that conference call got started, look at that big volume back there as well. Those dark blue bars represent the volume. That's after hours volume. And basically people just started dumping that stock after hours. So it went from being at 122 early on to giving back all of those gains. And you actually ended up down here below where it closed when it was all said and done. You can see the bid and the ask is it's stagnant now because the market's after-hour session is officially done on the Thinkorswim platform, because again, I'm doing this video a little later than normal right now. But where we kind of closed in the after-hour session was right around 107.5, so $107.50, and that was about $2 less than where Amazon closed the normal session. So we went from being up $12 per share to actually closing down $2 per share. So talk about a wild roller coaster type of a ride in the after hours session there for Amazon shareholders. And so that might have had a little bit of an impact on what we should expect for tomorrow morning as well. You'll notice initially I've got the S&P 500 ETF pulled up here now, SPY, and you'll notice as soon as Amazon released their earnings, SPY went up as well. So SPY went up to $413.57. So it was a good dollar or so higher than where the close of SPY was at the end of the normal session. But same thing there, it gave back all of those gains, and right now SPY is actually trading below 412. So it gave back all the gains and now has gone into the negative territory. Not by a lot, so this could easily, change tomorrow morning. Remember, we do still have a whole slew of additional companies coming out with earnings tomorrow morning, including Exxon and Chevron. So a couple of the big oil companies will come out tomorrow morning before the bell. So this is a good time of year for you to be following my 9 at 9 every morning. Remember, that is a free service. So for those of you that want to get a feel for which stocks are likely going to be affecting the market every trading day, I would encourage you to either follow my Twitter feed at 9 a.m. Eastern Time or go over to the Market Scholars website, where I also post it there right around 9 a.m. in the morning on the blog part of our website. So that'll give you a heads up as to which stocks and sectors appear to be in play, so to speak, before the normal market session opens. So that way you can respond to that and act accordingly and make sure you're practicing your risk management and all that kind of stuff as well. All right, let's go ahead and pop on over here to the internet. I always like to get a chance to say thank you to those of you that helped support this presentation. Also, I'm excited to see which young men go to which teams here with the NFL draft tonight. As many of you know, I'm a Rams fan, so I don't know if we'll end up with anything good, but we could use it after last year, I can tell you that. So, but it should be an exciting night in Kansas City as we go through the NFL draft. But anyway, thank you for those of you that helped support this presentation. As I always say, as long as we're up and over 100 likes, I'm happy to do a full-length video, even if it is a little inconvenient to my personal life at times, like it is now after waiting for my darn lawn guy to stop by and pushing my night out a little bit longer than I would prefer here to do this free video as well. But I try to be a man of my word, and since you guys got me to 100 likes, by golly, I'm going to do this video for you. So thank you to those of you that support me night in and night out, and I know David would say the same thing as well. So thank you to Business News, thank you to Vodacon, thank you to Nina, thank you to Stock Market Junkie, thanks to Jeff and to Teddy and to Paul and Michael and Jim and Steve and Prickly Trader and Lucius and David and Umaru and Dennis and Margie and Vernon and Jim and Brandon and Doug and Paul and Ayakipa, Dave, Greg, Surendhar, Marty, H. Batel. We've got Serene and Craig, GJ, we've got T-Fib, Claire. The list goes on and on and on. Too many of you to rattle all of you off, but I do appreciate each and every one of you taking the 5 seconds out of your day to help support David and I in doing these free videos. Remember, we don't ask you to pay us a single cent for our time, and these videos do take a lot of time, at least 3 hours of our day. All we ask is for a little bit of your support on social media. That goes a long way for a couple of business owners like David and I. So thank you very much. Please keep that up. Let's also have a little chat here about our factor selector tool. Reminder that this gets put out on Tuesday evenings, so it is a couple of days stale right now, and I'm sure that probably had an impact on a day as aggressive as today was. But remember, on Tuesday night was the night when we closed down 1.6%. And so it made sense that low volatility, which is more of a risk-off type of a factor, went from number 4 all the way up to number 1. And it replaced quality. You guys have heard me mention to you multiple times in the past that quality is highly correlated right now to the technology sector. And when I went through the sector selector with you guys in Tuesday night's video, remember how technology, the sector, fell from number 1 all the way down to number 6 out of 11 on the sector selector. So now when we look at the factor selector a couple of days later, we should not be surprised that quality, which has a high correlation to technology, also fell. Maybe not quite as dramatically. It only fell a couple of places there nonetheless, after a reign of what appears to be about 7 weeks in a row with quality at the top. They have now fallen to the number 3 position, which is actually their lowest position here over the last 3 months of this graphic. So I would imagine that after today, it probably snapped back up, and I wouldn't be surprised at all as long as these gains hold until next Tuesday. I wouldn't be surprised at all to see quality either go back to number 2 or to number 1, because again, technology snapped back today. So this could be very well just a brief drop in the rankings until it stabilizes once again. On the downside, you do see that low size was the worst or the bottom ranking for the second straight week. And that's kind of the same story as I was mentioning when we reviewed this with you last week, which is, you have a healthy amount of regional banks in the low size factor, and therefore with the regional banks still struggling on a relative basis, they're just having a hard time keeping up with the mega cap tech stocks and all the other more exciting investment opportunities out there. So that's where things stand with a factor selector. We also had a good day of classes as always here today. I taught my question and answer session for about 3 hours and 15 minutes today. So we had a lot of good conversations about banking stocks and some large cap pharma companies that might be setting up for some interesting opportunities, and a number of other things. So feel free to check out my recording if you are a premium member of Market Scholars. And then David taught his ETFs class today. So portfolio management with ETFs, if you want to get David's opinion on how the economic movements and macro factors are affecting his mindset for building an ETF portfolio, then that recording should be available here for you as well. And then tomorrow he'll be back in action with his technical analysis class, so make sure you check that out as well. All right, let's go ahead and pop back on over here to the platform, and let's do some 12 grid analysis. So we're going to come over here to chart 5A. And a reminder that the background colors of these 12 grid charts are going to tell us what the current posture is using the market forecast intermediate line, which is basically the green line on the market forecast. Remember, if you want to see the actual market forecast indicator, you do have to right click. So like on the Treasury chart here, the Treasury yield chart, I'll right click and then maximize. And you can see here down below is the actual market forecast indicator. But because of the way that Thinkorswim works, they kind of hide that, because otherwise it would just scrunch things up too much when you're looking at 12 different charts. So the background colors are accurate based upon that indicator, but the indicator itself is kind of listed behind the scenes that you have to maximize if you really want to see it. But otherwise, if we're just trying to get a lay of the land, it's helpful just kind of understanding the color coding system that comes with the miniature charts. So in the lower right-hand corner here, we do have the 10-year U.S. Treasury yield. It was up today, and you can see that we closed at 3.52%. That's up pretty nicely from where we are at just a couple of days ago. And remember, a couple of days ago, I was talking about how when interest rates were falling, the stock market was falling, and that was different from last year. Well, here we are 2 days later, and I would say the same thing. Today, interest rates are rising, and of course the stock market was rising, and that is the opposite of last year. So It seems like there's kind of been a sentiment change in that regard here more recently. Of course, there's a little bit more concerns now that we are legitimately going to have a recession. I know people have been saying that for a long time, but if you're reading through the tea leaves of the different yield curves and everything, that's what the bond market is expecting right now. So maybe when you get rising interest rates, it's sending a message to the market that maybe the recession will not be deep, and it can be kind of more of a soft landing type of a situation. But who knows? What we do know is that it was a pretty strong session here today for yields, and it did push us back above the rising 30-day moving average. I know that's probably hard to believe because the moving average is right down there near the lows of its entire move in the last 3 months. But there is a little curl higher there at the end. So it is a rising 30-day moving average that we are now closed above. Now remember, the opposite of Treasury yields is what's happening to Treasury bond prices. And that will be this chart in the middle rung off to the left, TLT. We'll actually be talking about this later on in the presentation tonight when we get to the trade application example. But for right now, just realize that with interest rates going up the last 2 days, long-term bond prices went down the last 2 days, and it's kind of the opposite here. You can see that we are now trading below the falling 30-day moving average on TLT. To me, neither one of these looks like an actual trend, right? Whether you're looking at TNX to get a feel for rates, or if you're looking at TLT to get a feel for bond prices, to me, it's not like an exaggerated uptrend or an exaggerated downtrend. It seems like it is kind of a listless, meandering type of a chart at the moment. But things can change there as well. But be aware that after what looked like could have had the ability to bounce up and off the moving averages 2 days ago, is now showing us the exact opposite thing. Now it's almost like, is that moving average being used as resistance here all of a sudden? So TLT is back to a strongly bearish posture, trading below that falling moving average. In the lower left-hand corner here, you will see that the US dollar had a pretty flat day. It was only up 0.04%, and it remains below that falling 30-day moving average. Remember when I was with you last time, I'm pretty sure that the US dollar was weekly bullish that day, and I said I wouldn't really read too much into that because we're still in the path of least resistance to the downside with that moving average. Well, here we are a couple of days later, and we still have yet to get up and over that moving average, so my mindset around it is still the same. To me, it feels like we're still in a weak dollar environment until it can prove otherwise to me. So in order to do that, it's going to have to spend some time above that moving average, and at this point, it hasn't even touched the moving average yet. It's gotten close to touching it a couple of times, but it's almost using it like kryptonite right now. It's just staying away from it. So we'll see what next week brings, but for right now, it seems like we're kind of meandering slightly lower on US dollar. Remember, in all else being equal, that's actually a good thing for the stock market, at least in my opinion. A lot of US companies that have sales overseas, otherwise known as multinationals, they benefit typically when the US dollar gets weak. And so for the most part, I would prefer when the dollar is weak as opposed to the dollar is strong as an investor. And that's kind of what we're getting right now, which is part of the reason why the US markets are working right now, right? Why they have their bullish posture. You will see here that gold had a flat day as well, kind of in response to the dollar. It was up 0.01% today, but it's basically just sitting on its moving average right now. So if it's going to make a move, now would be the time to do it, right? This is your moment to try to bounce up and off that moving average. Not sure if it's got it in it or not, but we don't want to count it out at the same time because it's right there in that territory. We could find out as soon as tomorrow. It could break up violently or it could break down violently, and it could give us some additional information, but right now we just have to await further information because it's just sitting there not making a move quite yet. Oil was up 0.69% today, but remember, oil's been on this pretty rough stretch here in the last 2 weeks after getting this overbought cluster signal, and now it's just sitting directly in the middle of its 3-month range. So kind of the same thing there. If it's going to bounce, this would be a normal spot to expect that bounce. Speaking of bounces, take a look at Bitcoin. It continues to bounce. Remember, I talked about that on Tuesday, that I was impressed with its stabilization on Tuesday despite a lot of other risk appetite types of stocks and securities out there really struggling on Tuesday. Bitcoin was stable on Tuesday, and here we are just a couple of days later, and it continues to bounce. And that's exactly where you wanted to see it bounce. It came down to the moving average, is now bouncing up and off of it, continues to have that strongly bullish posture, also trading above that rising 30-day moving average. So for those of you that want to take a stab on Bitcoin, it wouldn't be the worst idea. Here's a good bounce setup right here. Of course, you got to manage that appropriately and make sure you have risk management and proper position sizing and all that kind of stuff. But, that's kind of what you're looking for as a bounce trader. In terms of the foreign stocks, we had a good day out of EFA. It was up 1.25%. We also had a good day out of EEM, which is the emerging markets, up 1.35%. But between those two, you'll notice they look quite a bit different. EFA, which is the developed foreign stocks, is up here basically at 3-month highs, whereas EEM, the emerging markets, are probably a little closer to 3-month lows than to 3-month highs. So it's interesting to see a pretty large difference between those two categories at the moment. Typically, it does not work out that way. But right now, if you're going abroad to look for investment opportunities, the strength is in the more developed portions of the world. Preferred stocks getting a little bounce up and off of their rising moving average right here as well. Let's now take a look at our 12 grid for sectors. Let's pull that up here. And as we do, you can see that we have a mix of green and pink charts here. In terms of the bigger movers today, let's start with communications up at the top, because it's pretty rare to see a day when an entire sector is up 5.8%. Of course, you can have those types of days in moments of crisis, right? Usually they're dead cat bounce types of days where the market might have been down like 9% the day before, and then the whole market, bounces back 7% the next day or something like that. But that's not the environment we're in right now. So it almost makes this a little bit more emphatic. But the reason why communications was up 5.81% today was because of the impact of Meta that I had mentioned before. Remember, when we're looking at the communications ETF XLC here, this is a market cap weighted one, which means that the biggest players have an even bigger impact to begin with. So that's going to help it along as well. Like if we came over here and looked at the equal weighted ones, I'm going to guess it was not up 5.8%, but let me just verify that with you. It would be right here, and you can see the equal weighted communication services was only up 3.73%, so quite a bit less. So the 200 extra basis points of outperformance that you saw from the market cap weighted ones is solely due to Meta doing as well as it did. Of course, some of the other bigger players like Alphabet and Comcast also helped, but this was largely a Meta story here today as far as why did XLC have a phenomenal day. And what's interesting about this is we are basically back to 3-month highs with one fell swoop. Just yesterday, we were breaking down below the moving average. One day later, you could say that we're basically at 3-month highs. Back over here, on this candle on February 2nd, that was the day we had that overbought cluster signal, and we had an immediate sell-off after that all the way to the oversold cluster signal. It's always fun to see it play out that way. It doesn't always work that way, but sometimes when it does, boy, you can make a lot of money trading a chart like that, selling up here, buying back down here, and playing it over again, right? But again, you got to be careful with that because nothing is ever 100% in technical analysis. There are going to be examples where it works perfectly. There will be other examples where it fails spectacularly as well. But this is a very good example of getting out of the trade when it was overbought, getting back into the trade when it was oversold, and then taking advantage of both sides. But anyway, back over here, the close on Groundhog Day, back on February 2nd, was not showing the close on there. Let me right click, maximize it so we can see it a little bit better. So the close was 59.39, and wouldn't you know, that is exactly the close today. So this close on February 2nd matches to the penny the close that we have right here. So you could probably get away with saying we are at 3-month closing highs. It's just that you also should include that it's tied for 3-month closing highs. So an impressive move to say the least. Especially after I mentioned before, this looked pretty ugly with 3 days of selling in a row, and one single day not only eliminated all 3 of those selling days, but it eliminated the entire previous week and a half of selling. In fact, you could say it probably eliminated the entire 2.5 months worth of selling, because all of a sudden we're back here to 3-month highs again, matching where we were back in February. So without a doubt, one of the more important days that you've ever seen there for an entire sector when it comes to communications today. Technology also had a very nice day. You can see technology was up 2.12%, and now it's bouncing nicely up and off of that moving average. So again, I'll reiterate what I'd mentioned before, which is that on Tuesday, we saw technology really take a tumble, right? That was on this candle right here. And so naturally, the response to that from a factor perspective is that the quality factor was struggling. Well, here we are just 2 days later, and you've basically eliminated all of the selling in technology as well. Therefore, the quality factor in real time probably has a chance to get back to the number 1 or number 2 position. Discretionary also had a great day. They were up 2.64%. Remember, those 3, in my eyes, are the most important 3 sectors in the market: communications, technology, and discretionary. And the reason for that is that's where you've got your mega cap tech focus types of names. You've got Meta and Alphabet in communications, you've got Apple and Microsoft in technology, and you've got Tesla and Amazon in discretionary. Those 6 companies are incredibly important to the prospects of the entire market. So really, it kind of makes those 3 sectors the most important and influential, especially from a market cap perspective. So when those 3 have a really good day, there's a decent chance that the whole stock market is having a really good day, and that was certainly proven to be true today. You'll notice that many of the other sectors were not up nearly as much. Real estate was a little bit of an exception to that. Real estate was up 2.41% today, but you had a lot of other sectors that were just kind of meh type of performance. For instance, energy was only up 0.36% today on a day when the market was up 2%. And healthcare really was kind of a fizzle as well. Healthcare was only up 0.52%. Again, with the market up 2% today, you would have had to see 4 times the improvement in healthcare to match the market. So today certainly could be divided amongst big winners and smaller winners. We didn't have any losers, but there was definitely a wide variety of outcomes based upon what type of a sector you might have been involved in. So as it stands right now, we have the 4 pinkish charts on the board with a little bit more weak price activity, at least from a market cap weighted perspective, and those would be industrials, materials, energy, and healthcare. So those first 3 that I rattled off in the middle rung there, those are all cyclical types of sectors. Healthcare is a little bit more defensive, but you don't necessarily want to see the cyclicals falling out of favor, because the cyclicals should be kind of a way for you to take a test of the economic activity out there. And with those kind of cooling off right now, it is possible that maybe there are going to be some recessionary concerns. But at least the growth compounders out there, the digital types of companies, had a really, really solid day today. So all in all, I would say good progress for the bulls here after a very impressive day. Let's get into our trade application example now. And as I mentioned before, it's going to be on TLT. So I'm going to pull up chart 3A here, pulling up ticker symbol TLT. This is an ETF that tracks the long bond for the U.S. government bonds, probably one of the most liquid bond ETFs out there, at least for options traders, right? There are tons of bond ETFs out there, but many of them are not suitable for options trading. TLT is one of the rare ones that is. And so what I thought we would do today is put on an iron condor on this, because to me it looks like, as I mentioned before, it's just kind of meandering and chopping sideways. It's not really showing us much in the way of directional activity. Those of you that are newer to options trading, you might not be familiar with an iron condor, but basically what it is, it's a combination of two credit spreads. You have a sold put spread on the downside, which is a bullish trade, and you have a sold call spread on the top side, which is a bearish trade. And each one of those spreads creates a break-even number where you do not want the underlying security to cross. And so what I did in this case was I sold the June monthly contracts on TLT, and for the bottom side, it was 98.97 was my my bull put spread. So selling the 98 put and buying the 97, and then on the top side, on the call spread side, it was selling the 111s and buying the 112s. And I was able to get more than a 30% return on risk. Remember, I always do these trades while the market is open and then send out that information to our premium members via the Telegram channel, so that way they have an extra opportunity to look at the trade while the market is still open, which gives them a little bit of an informational edge there, as opposed to just discovering the trade on the nightly YouTube video, and then the next morning it could very well move away from you, or you might not be able to get the same fill prices or what have you. So there is a little bit of an advantage there for those of you that choose to become premium market scholars with David and I. But anyway, if we were to kind of draw those break evens, let me get my drawing tools out here, and I'll give you kind of an idea of this, because sometimes having a visual is a little bit more helpful to kind of explain what it is that we're hoping to accomplish. So on the top, I think my break even was 111.26, because we got 26 cents for the contracts on the credit. And then on the bottom side, it was 97.74. So these two kind of blue lines that I drew here represent our break even on this trade. And again, with this type of a trade where you're selling an iron condor, what you're hoping for is that the security in question just goes sideways between now and whatever your expiration period is. And again, I'm doing the June monthly contracts here. So you can see I have a pretty nice kind of safety net cast over this trade right now. Obviously, nothing is a guarantee in this business, but in general, it kind of has those features that I would prefer. In other words, we are seeing a full 3 months worth of trading data here in front of us. And on the top side, where my break even is, it's clearly above the previous 3-month high at 109.35. We could allow it to go up basically $2 whole more per share until it threatens our break even on the top side. And then on the downside, the worst that it traded in the last 3 months was down to 98.88, and our break even is down here at 97.74. So a full $1 of extra wiggle room to the downside as well. So if you're looking at a chart like this and you can't make heads from tails, and you're thinking, well, I can't pick a direction here because this is really not giving me any indication of which direction it wants to go. Well, remember, if you're pretty convinced on that, you have a trade, right? A lot of times people would say in the past, well, if I can't pick what direction it's going to go, then I'm just out of luck because I can't do a trade then. Well, once you start learning how to do options, it opens up a lot more avenues for you, and figuring out which stocks or ETFs are going to go sideways is just as useful as figuring out which ones are going to go up and which ones are going to go down. So with TLT, we're hoping for continued neutral type of activity after a 2-day sell-off here. You can see we're back below the falling moving average. We have more of a bearish near-term posture as well. That doesn't really concern me all that much. What I care about is the fact that we're basically back in the middle of this 3-month range again. So we have pretty much equidistant upside and downside. We probably are giving ourselves a little bit of extra cushion to the downside here. Nonetheless, it's a reasonably equidistant type type of a trade setup that we have here. So what we're hoping for is that interest rates kind of stabilize and that bond prices effectively just tread water sideways. And if that does happen, then we'll collect our 30% return on risk, put a smile on our face, and go look for another trade once that is all settled out. Okay, so that's what I had for you here this evening. If you enjoyed the presentation, I ask one simple request out of you. Click like for me there on Twitter. As long as we're up and over 100 likes, by the time I'm scheduled to do the video again on Tuesday, I'll plan on doing another full-length video like this one where you get the trade application example and the 12 grids and the sector selector analysis and all that kind of stuff. Also, a quick heads up, I'll try to remind you of this on Tuesday as well, but a week from right now, I will not be doing this presentation because I'll be on my way to Omaha for the big Berkshire Hathaway conference. And so next Thursday, I will not be here with you guys, but I will be here Tuesday. So we'll see you on Tuesday, whether it's for a full hour-length video or whether it's just a 15-minute version. For those of you that prefer that, remember, don't click like. And if we're under 100 likes, then we'll just keep it nice and short with only the analysis on the 4 equity indices. So we'll let you guys decide between now and Tuesday what you prefer. But whatever you do decide, I appreciate you checking out tonight's video. I hope you all have a wonderful weekend. David should be back with you tomorrow, and then I'll see you all next week. Take care, everybody. Bye-bye.